Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Today we're talking about healthcare and healthcare real estate. My guests are Paul Zeman, President, National Healthcare Capital Market Group, and Henry Johnson, Chief Strategy Officer with Freese Johnson. And Paul, I'd like to talk about investment property sales. I mean, everybody thinks that healthcare real estate's a real sexy place to put their money, but it's also a very involved sector. You know, what do you see for investment sales volume so far this year, and how's that comparing to recent years?
You know, Michael, in the first quarter of 2014, we were well behind the pace that was set in 2013, but we've recaptured and pushed beyond in the second quarter. Second quarter sales volume was about 1.6 billion, which sounds like a lot, but on a large scale, it's dwarfed by office properties,
right,
which we'll talk about.
Yeah. And let's talk about cap rates a little bit. Of course, everybody wants to know about cap rates, but of course cap rates are going to vary depending on the building, the submarket, and of course the tenant and the age of the building. But when you talk about institutional quality medical office buildings overall in the U.S., what are you seeing for cap rates?
You know, Michael, we're seeing for, again, institutional quality, greater than $5 million transactions. We're seeing an average cap rate in the low 7s, 7.2, 7.25, somewhere in that ballpark. However, I've got to emphasize that there's a lot of factors that affect cap rate, including the proximity to campus, how the leases are structured, the credit of the tenants, whether there's hospital sponsorship, the types of guarantees, the debt on the property. There's a lot going on.
Right, so just don't go out and pay a 7 cap or expect to get a 7 cap if you've got a medical office building. That's just an average. And so give us an example of where of a different cap rate on a building.
You know, well, I think that what I would really need to point out especially is that how the property is structured in terms of how the entities are set up, how the leases are structured, can really mean a difference in millions come disposition time. Mm-hmm. But in terms of a cap rate, I'll give you an example of a property that I'm working on in South Carolina right now that's off campus, but it's institutional quality and it has solid credit, but there are some other factors that are driving the cap rate a little closer to 9. And we see the on-campus trophy properties trade sometimes in the low 6s. So there's the 7.2, 7.25 is definitely an average.
Yeah, and I think that's a valid point to bring up there that you mentioned about, you know, the setup of the leases and the expenses and how things are set up when these buildings can really dramatically impact the value when it comes time to monetize or refinance or sell the assets. So, you know, how if you're buying a building, you were setting up a building, you know, how could you find out, hey, what should I do here? How should I set things up to maximize value?
You know, you want to think about a lot of the items, like you mentioned, the lease terms, the lease structures, where interest rates are, what type of capital stack or possibly capital expenditures you have coming at you, and what the market is doing overall.
All right, so maybe instead of waiting to call you when they're ready to sell, maybe call you a little sooner, you know, when they have some big decisions, or maybe when they're setting the asset up in the beginning, right, to set it up correctly in the first place. I mean, I've heard you tell people before that, you know, that one change you did in the setup changed the value about $1 million. And we call you before, we need you to sell the building to give us some advice.
You know, it's never too late, but yeah, I'd like to hear from you today. Even if you were to sell in 5 years, it's a great idea to start kind of planning the exit.
Michael, I think the some of these properties are more specialized. I think the underwriting of those and how you're seeing the cap rate spreads are pretty significant in how the businesses ran and like the replacement value and the life after the building. You probably see that, Paul, where, you know, if you're putting $500 a square foot into a property and it can only be used as that specific use, that probably plays a pretty strong role in how you're going to be able to sell that asset.
Absolutely. The specific of the use can limit the uses down the road and affect value. And Paul, the cap rates for medical office do trend a little higher than just regular office space. And what is the difference there and why?
You know, Michael, that's always baffled me a little bit, why medical office cap rates would be a little bit higher than office, but I've just got to pin it down on the cost of the build out and the cost of relocating healthcare tenants in a medical office building are far greater than the cost associated with an office building. And that just is all factored in eventually in the underwriting.
Yeah, because it's just an office building, but there's a lot more going on, right? It's just more difficult office building.
Said that people ask, what's the difference between medical office and office? And I say they're very similar, but medical office is just really complicated office.
Right, exactly. I can imagine managing a medical office building is going to be a lot more difficult, a lot more going on than a normal office building. And while we're on that subject, let's talk about the size of the market a little bit. I mean, it's a very specialized market, isn't it? What's the difference in the size of the regular office market compared to medical office?
You know, medical office really only represents about 4% of the size of the office market. And in fact, in the second quarter, like we mentioned, about $1.6 billion of medical office buildings traded, almost $28 billion worth of office properties traded in the second quarter.
Yeah, that's an amazing difference, and I guess that's not going to change, right? I mean, you would expect that, well, we're going to see more medical demand, and in some cases we're seeing the square footage per employee shrink on regular office, but it's probably not going to change significantly, is it? It's still a small market compared to office.
True.
I think a lot of that too. I read it recently in a study that showed that healthcare systems actually still hold 80-85% of the assets. So maybe when trying to keep up with the Affordable Care Act and electronic medical records and whatnot, you may see those guys begin to monetize some of those assets.
Yeah, well, I think it's a good time for large healthcare systems to consider building buildings, and you sell those buildings when you move in if you like, or hold them. So I think there's a lot of opportunities there. Well, stay tuned. We'll have more on healthcare and healthcare real estate. I'm Michael Ball. This is the Commercial Real Estate Show. We'll be right back.
The Commercial Real Estate Show is brought to you by Florida International University and Bull Realty Commercial Brokerage, a great place to do business. For more information on these companies or to access additional podcasts, videos, or blogs, visit commercialrealestateshow.com.